Welcome to the Riskwiser Zone. I'm your host, Louie. To start off, let's take a look at the current market trends. In recent news, IT stocks have been making headlines with their promising performance. According to a report by Economic Times, Indian IT companies are expected to see a significant boost in their margins due to higher prices and cost savings. This is good news for investors who have been watching the sector closely. One of the key players in this sector is Tata Steel, which has guided for a capex of around 20,000 rupees crore, primarily directed towards expansion projects in India. The company expects margins to improve in the current financial year, supported by higher steel prices, rising domestic volumes, and continued cost savings. However, increasing raw material costs and execution risks in Europe may limit the extent of margin expansion. On the other hand, the IT sector has been experiencing a surge in demand, with companies like Tata Consultancy Services and Infosys reporting strong quarterly earnings. The sector's growth is expected to continue, driven by increased adoption of digital technologies and a growing demand for IT services. As we navigate these market trends, it's essential to remember that investing in the stock market always involves some level of risk. It's crucial to do your research, diversify your portfolio, and consult with financial experts before making any investment decisions. We'll be keeping a close eye on these developments and bringing you updates as more information becomes available. In our next segment, we'll be discussing the implications of these trends on the overall market and what they might mean for your investments. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the latest developments in the global economy, and today's stories are packed with insights. Let's dive into our middle segment, where we'll examine the current state of the financial markets. We've seen a significant shift in investor sentiment, driven by the ongoing Iran war and its impact on energy prices. The dollar has reached a 6-week high, fueled by expectations of higher interest rates to combat inflation. This change in sentiment has led to a global bond sell-off, with the yield on the U.S. 30-year Treasury bond hitting its highest level since 2007. The uncertainty surrounding the war's end has weighed heavily on market sentiment, triggering a risk-off approach among investors. The Japanese yen, often considered a safe haven currency, has weakened against the dollar, prompting concerns about potential intervention by Japanese officials. Meanwhile, the euro and British pound have also been affected, with both currencies experiencing declines against the dollar. The Australian and New Zealand dollars, seen as barometers for risk sentiment, have also fallen. As we navigate these complex market dynamics, it's essential to consider the potential implications for investors and businesses alike. The Federal Reserve's next move will be closely watched, with traders pricing in an over 50% chance of a rate hike by the end of the year. We'll continue to monitor these developments and provide you with timely updates and analysis. For now, it's clear that the current market environment is characterized by heightened uncertainty and volatility. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at a developing story in Bolivia, where escalating anti-government unrest has sparked concerns about the country's stability and economy. Protests by unions, miners, transport workers, and rural groups have grown in recent weeks, pressing centrist President Rodrigo Paz to roll back austerity measures and address rising living costs. Some protesters have even called for his resignation, reflecting a broader backlash against his government, which took office in November after nearly 2 decades of leftist rule. The situation has become so dire that several banks in the capital city of La Paz have temporarily closed their branches due to security concerns. The U.S. Deputy Secretary of State, Christopher Landau, has expressed concern about the situation, stating that those who lost the election last year are trying to overthrow President Paz. Meanwhile, the European Union delegation in Bolivia and 5 European embassies have issued a joint statement calling for dialogue and peaceful demonstrations. The protests have triggered widespread roadblocks, stranding trucks on highways and contributing to shortages of food, medical supplies, and fuel. To understand the root cause of the unrest, it's essential to look at the economic situation in Bolivia. The country is facing its worst economic crisis in a generation, with global energy shocks linked to the Iran war adding pressure on households. According to economist Gonzalo Chavez, there are no easy or quick solutions in sight, and Bolivia is caught between the exhaustion of a state-led economic model and the absence of a viable alternative. As investors, it's crucial to keep an eye on this developing story, as it may have implications for the global economy. The situation in Bolivia serves as a reminder that political instability and economic uncertainty can have far-reaching consequences. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.